Something crazy is happening right now in the financial markets, and we need to address this. If you hold XRP, or even if you don't hold XRP, this is a very big concern. And it's going to only get worse going into 2026. We are going to address what just happened here on XRP. Going into the early morning of December 28th, we started to see a nice push to the upside in the market, even on Bitcoin. Bitcoin had a nice jump to 90K yet again, just to have a massive sell-off, affecting the entire market. Is this normal price action? Absolutely not. This is pure manipulation. We have been tracking these moves throughout the last couple weeks, because just looking at the 24-hour view here on Bitcoin, it doesn't look like much, okay? We're just having a lot of chop within here. However, prior to that, we were starting to see spikes up to the upside on a much larger scale. I mean, we're talking about well over $10,000 here. Just have a massive sell-off. Again, build up the position, massive sell-off. Build up, sell-off every single time. Looking at the 4-hour view, you could see the major wicks in between. The major jumps to the upside, massive sell-offs. Like, these are significant candles. We're talking about $3,000, $4,000, $5,000 candles in the span of a 4-hour period. And it's been only exaggerated more and more since going all the way back to the end of November. This is pure market manipulation. What's the main cause of all of this? Well, there's a few factors, and we're going to go over them. Let's start off with, of course, this post from Bull Theory. So, weekend manipulation in crypto. Bitcoin pumped $3,000 and broke 90K. Liquidating $103 million worth of shorts on Sunday night. But then Monday morning, it dumped $2,700 and liquidated $40 million worth of longs, erasing the entire pump. Absolute insane. Now, yes, it is insane. Is this all caused by, something happening within the market? Is it some sort of announcement in terms of the news or anything? No. This is market makers wiping out the leverage positions. This is mostly retail getting wiped out as well. But what's even crazier about all of this is the timing of most of these sell-offs. Always around, 9 to like 11 a.m. every single day, rinse and repeat throughout the week. Weekend price action. I've always said you can never trust weekend price action. It's almost 99% manipulated every single time. It's not tied to anything. This is why it's a big concern trading over the weekend. But also on top of all of this, there was something getting exaggerated going into the weekend. Silver was rallying, gold was rallying, all the metals were going crazy. This caused everyone to be looking into something happening behind closed doors. For example, here we have, just in, odds of a US bank failure spiked to 71% on reports that a systemically important bank collapsed at 2:47 a.m. on Sunday. Now, we know that the odds here were driven by only like $1,000 worth of volume. You could see it on this screenshot. Only $863 worth of volume, causing this to skyrocket. Reason why is because guess what? Everyone loves to watch the prediction markets. They're watching this closely to see what's happening. This spikes at the same exact time that we're starting to see this screenshot getting circulated, and we're seeing accounts saying a bank just went under. This account only has about like 20,000 followers, not even. And this was the screenshot. The screenshot is, as this story is written, it is 11:01 a.m. Eastern US time on Sunday, December 28th. Reports have been coming in claiming a systemically important bank, a major player in silver futures, failed to pay its margin call by 2 a.m. and was liquidated by the futures exchange at 2:47 a.m. Eastern US time. The reports are concealing the name of the bank, but it is confirmed that overnight, the Federal Reserve was forced to pump another $34 billion into the banking system through its emergency overnight repo facility. This $34 billion is on top of the $17 billion which had to be pumped in 2 days ago on Friday morning. The bank involved is described as one of the largest players in the precious metals derivatives market, blew past every risk limit, breached every covenant, and also exhausted every line of credit. Now, there was zero reports of this. Zero credibility at all. just a screenshot. A bank just went under. Prediction market's going crazy. And this account called Silver Trade, again, only 20,000 followers, was a major bully on bank's legacy silver short liquidated last night. And it broke it down completely about how they just injected liquidity, all this kind of nonsense. Again, even going back to this post, we have, community notes. The overnight repo shows nothing beyond the 17.25 billion morning operation with zero demand at the afternoon operation. There is no communication from the New York Fed on any additional 34 billion. Yeah, because all of this stuff is made up. It's nonsense. Even this post, nonsense. This was the only account that I saw putting this out. And we have, and this is from TF Metals. And I hope that by now you figured out that the whole margin call and bank failure story is bogus. There was no forced liquidation and no 8K filed on December 27th. Totally false, but fed into the AI feedback loop regardless. Yeah, because we're starting to see so much AI nonsense. All of these reporters, mostly AI-based reporters. This is something that you need to be aware of going into 2026. There is going to be so much AI slop being put out, talking about, oh, this just came out, or breaking news, this bank collapsed, that bank collapsed, or, oh, we're about to see a massive announcement. Like just recently, and I posted this on my X account actually, it was this post that said, breaking, Trump says there may be surprises in the next 48 hours. Zero sources, zero credibility, all hype, 160,000 views. It's insane how much engagement is happening on these AI-based accounts that have zero sources, and it's affecting markets in a big way. Now, is this something that's affecting the price of Bitcoin and crypto, especially over the last couple weeks? Absolutely not. In fact, most of the sell pressure here has just been liquidations. But it's also liquidations that are built off of, fake news most of the time, where we're starting to see oh, this bank is tapping into Bitcoin for X, Y, and Z with zero, credibility, zero sources most of the time. It's truly remarkable on how all of this is, playing into market manipulation. But we will say this, okay? The Fed is injecting liquidity. They've been injecting liquidity since going all the way back to November. November 1st, the Fed pumped $29.4 billion into markets overnight. We see that in terms of the, repo purchases. We could see this. We could track everything on, the Fed platform. Now, on top of this, we also have over here from December 1st, breaking U.S. banks. Fed Reserve just pumped $13.5 billion into the U.S. banking system through overnight repos. This is the second largest liquidity injection since COVID and surpasses even the peak of the dot-com bubble. Probably fine. Carry on. We could see it right here. Again, this is all trackable. This is all traceable. On top of this, another major injection just happened. We see here $25.9 billion. Now, again, this is all through, repo operations. It's not directly into the economy or anything like that. It's support for the system. Is things breaking? We don't know. One thing that I'm very certain about here is that the metals market's going absolutely crazy the way that they have been. It's causing a ton of people to overreact. It's causing a lot of, mania, if you will, in the market. But I do think that it's warning us about something happening. Is that going to happen in 2026? Is it going to happen in 2027? We don't know. But something is breaking, which is why the Fed is trying to, fix this. They're trying to fix it by injecting liquidity. We even have over here, the U.S. banks. Fed Reserve just pumped $16 billion into the U.S. banking system through overnight repos. This is the second largest liquidity injection since COVID. This is building on top of the December 1st liquidity injection of $13.5 billion. We're talking about well over $29 billion injected into the banking system in the month of December alone. Something's happening here. Now, when it comes back to crypto, one of the biggest arguments during this entire time is that Bitcoin and crypto sucks because this is what Bitcoin's doing, which technically speaking, even with all of the manipulation wicks here, all we're really doing is just chopping and chopping and chopping while every other market is going crazy. Crypto is not just going to sit here doing absolutely nothing. In fact, with all these liquidity injections, let's go over here. When liquidity loosens, crypto tends to breathe easier. Just a week after the 6.8 billion repo injection on December 22nd, first of its kind since 2020, the Fed follows up with a larger $29.5 billion overnight repo operation today to smooth funding pressures. These temporary ops prevent spikes in overnight rates and keep reserves comfortable. Standard maintenance as banks window dress their balance sheets. The real question remains, is this just seasonal housekeeping or early signs of broader easing ahead? For crypto traders, more system liquidity equals oxygen for risk assets. Bitcoin and altcoins have historically loved these looser conditions. And even over here from both here, yes, we do have a full breakdown of this. Here we have, charts that, pertain back to silver, gold, everything. During this entire time, right, while silver is going crazy, gold is going crazy, a lot of them did top back in 2020. These are the 2020 tops. Okay, we have Bitcoin doing absolutely nothing back in August 2020, while silver went crazy, gold went crazy, and even the total market cap of crypto, altcoins included, August 2020, doing nothing. Both of them doing nothing. Why is Bitcoin going down 30% from its peak while gold and silver are going parabolic? Because gold and silver tops first, then Bitcoin starts its rally. Here's what happened last time. After the March 2020 crash, the Fed injected massive liquidity into the system. The first assets to react were gold and silver. Gold rallied from around $14.50 to $20.75 by August 2020. Silver rallied from around $12 to $29 in the same period. During this entire move, though, Bitcoin did almost nothing. Bitcoin stayed stuck around $9,000 to $12,000 for 5 months. This was also after a major liquidation event, which happened in March of 2020 due to COVID. Gold and silver peaked in August of 2020, and money started rotating into risk assets. The same setup is basically happening here. We had a massive liquidation event back in October. Okay. We're now starting to see gold and silver going crazy, potentially peaking, and Bitcoin is doing nothing. But money started rotating into risk assets. This is when Bitcoin started moving. From August of 2020 to May of 2021, Bitcoin went from $12,000 to $60, almost $5,000, nearly a 5.5x. The total crypto market cap went up almost 8x by mid of 2021. Now look at today. Gold is again near record highs around $45.50. Silver has surged to over $80. Both are clearly moving first. Bitcoin, meanwhile, is mostly moving sideways, just like it was in mid of 2020. We also had another large liquidation event recently on October 10th, similar to March 2020. And once again, Bitcoin has spent months moving slowly after that. The difference this time is important. In 2020, liquidity from the Fed was the main catalyst. In 2026, there are multiple catalysts lining up at the same time. The Fed has already started injecting liquidity again. Rate cuts are expected to continue. Banks may get SLR exemptions, allowing more leverage. Crypto regulation clarity is improving. The Trump administration is planning for dividend checks. More spot crypto ETFs, especially altcoin ETFs, are expected. Large asset managers now have easy crypto access. A new pro-crypto Fed chair is coming, and markets will front-run policy changes. Last cycle, Bitcoin rallied mainly because of liquidity. This time, liquidity plus structure is coming together. The setup looks very similar, but more fuel. Gold and silver moving first is not bearish for crypto. By the way, gold and silver rallying as high as they are, that's building out a massive amount of liquidity in the back end of things that could potentially rotate. Historically, it has been the early signal. If this pattern repeats, Bitcoin and crypto markets do not lead first. They move after the metals pause. That is why the current sideways action in Bitcoin is not the start of the bear market, but rather a calm before the storm. And I do agree. I agree completely. I think that this is a very bullish setup, very similar back to 2020. But most people are, looking at this in a completely wrong way. I think that most people are wrong about what's happening right now in the crypto space. So with that being said, I hope that you guys enjoyed this video.